Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, I am going to analyze and see why the AMC gamma squeeze that didn't, couldn't. Why and how, and what can we learn from this? So let us begin. This is March 1st, 2021. There was a lot of anticipation about AMC because last week on February 26th, when the stock options expired, there were more than 140,000 contracts of stock call options in the money that expired. And there was great anticipation that whoever wrote those call options had to go and buy 14 million shares in the market on Monday, that is today. What happened? On a day when Dow rose more than 600 points, 2%, the Nasdaq rose close to 3%, S&P rose 2.39%. And what happened to AMC? There were a lot of expectations about the AMC stock price. In fact, people were expecting the AMC stock to jump from $8.01 when it closed on Friday evening to go like $20, $30 or all the way to the moon, including myself. I didn't mean I'm going to the moon, but I would have felt like I was going to the moon if the stock had gone up. But it didn't, or it couldn't. So let's explore some of the reasons that might be behind why the stock did not move as most of us expected, and what can we learn from that. To recap, the AMC stock ranged from $8.42 to $9.45 throughout the day. The stock was in a very narrow range of approximately $1.45. 141 million shares was traded, so there's a pretty good amount of volume for the stocks to be traded. So let us look at and see what actually was happening. This is just showing an expanded version of the stock numbers for Monday 1st, 2021. We are expecting that maybe there's going to be a lot of buying prior to the market. But actually, in the pre-market, there were only 5 million shares that traded. And this is what the maximum it reached was $9.20. Then it started off, it came down and tried to make another upswing, then came down. Finally, it had its final upswing, which reached $4.45 here. And the rest of the day, it was just dragging along. Even though the Nasdaq was just climbing, we were talking about like 15 million shares to be covered, and here 15 million shares traded in the first 15 minutes. Is this where the market makers covered their open naked calls? Well, I think I have a much broader explanation as to what might have happened and why the stock was not under buying pressure to push the prices to $15 or $20. Let's analyze that. The reason the stock didn't go to $15, $20 or to the moon is because the big money boys were well aware of the fact that close to 14 million shares, 140,000 contracts would expire in the money. It was not a shock like it happened with the GMC. So it was not Pearl Harbor. They knew in advance these things are going to possibly expire at the end of the week. The big money guys are not impulsive like me. They don't wait till the last minute to cover their, you know what I mean. They are proactive. They cover their positions with puts and other types of hedge funds. And here is a chart covering almost 10 days, and this is at 60-minute intervals. But the real story is something that most of us might not have thought about, and that is what happened here in the last 2 to 3 days of trading last week. If we had paid attention to this, we would have realized that's where the real AMC gamma squeeze was addressed. That's where the smart money knows how to cover their shorts. It is my interpretation that whenever they write open naked calls, they usually cover it with either stock or with puts. In that way, they are sort of neutral because they are getting money either way by time decay, the time value which they are going to get. The pop-up in price we saw on February 24th and 25th might have been the days where they slowly but steadily covered their positions. Let's face it, maybe each brokerage firm or each money market or hedge fund had to cover maybe like a million shares. It's not that difficult for them to cover that during a course of 2 to 3 days. And that's what I think happened here, which made the stock to go up. And many of us were thinking that they are going to open market on Monday morning and try to replace those million shares of AMC, which was not the real fact as we see today. The moral of the story is we can also start thinking and acting like the big boys, the hedge fund managers, the market makers, and the brokerage firms. Since they had their positions covered in advance, they did not have to go outside on a Monday morning to find those stocks. What do you think? That is my interpretation. I mean, I could be wrong, but I did make this prediction in my previous video, which was seen by more than 6,000 people, that we should be looking at from all different angles. I gave a contrarian view. I said maybe, they are already covering their positions. They will come back and then they may start short selling again to make a little profit. Let me get back to the chart of okay, like here, as you saw here, it went down here 15 million shares with a downtick. Probably somebody made money, who sold the stock somewhere at the peak, and it came down almost like more than $1. That is my conclusion. Let me know what you think. You may have a different explanation as to why the stock that was supposed to have a great gamma squeeze that didn't or couldn't, and why. Thank you so much for watching this presentation, and please do leave your comments and subscribe to our channel. I will see you next time.